Good afternoon, everyone. Can't say happy Monday, but it's Monday, January 12th, 2026. Let me take this thing off. Unfortunately, my Eagles lost yesterday, and there will be a new champion in the NFL. There's a bit of a regime shift there, and we're very possibly getting one in the markets, as we've been talking about, the small cap dominance. And by now, I'm sure over the weekend you saw the whole thing between Powell and the video and versus Trump and the Department of Justice putting criminal charges against him. And you don't like to see that type of, Fed independence coming under fire. So markets are reacting appropriately. This is geopolitical volatility that you expect from, quite frankly, third world countries and emerging markets where they buy metals and things like that. And the market is always the smartest person in the room. And it possibly sniffed this out many ages ago when silver began running here, like you see from what is typical, during geopolitical events like this. So we will see. We'll take a look. I was literally talking about on Friday, China emerging markets. They really faded into the background, just kind of consolidating. And today, what are they buying as the U.S. takes a small bit of a back step? You'll see what I mean. Not really. The market has a perverse way of climbing a wall of worry here. And but today, Chinese internet at the forefront here. BABA with a massive day. Today's ETF edition. So we'll look at the biggest moves top down in the market. Chinese internet, a massive move today, and the gold miners, both of them moving 4% higher. So that is how they reacted to the Powell video and events over the weekend. While financials fall 1%, that is on the back of Trump saying that they should cap credit card limits. So MasterCard, Capital One, Visa, all getting hit very hard. It's unlikely to change since they're technically not the ones actually instituting the rates on itself, but it's more of an organizational level thing, but I'm not going to get into that. New all-time highs for silver. They've gobbled it up. We were talking about high, risk reward for asymmetric bets here and payoffs for silver. It continues to rally here, continuing to be overbought. Gold miners all-time highs. Gold, ETHA or developed markets in Europe. XLY, consumer discretionary, that is, as Amazon and Tesla continue to run higher, and industrials, new all-time highs for all those groups. So how bad can things be? We'll take a look. Also, I will be on the morning show tomorrow morning with JC Peretz and Steve Straza. Tune in for that at, I believe, 9 a.m. And then I'll be promoting my presentation on Thursday. If you're around New York City, come out downtown to Fidelity. I will be talking about many of these charts and more. And we'll get cocktails after if you want to talk to me about other things. Don't mention, the fourth down play call, Kevin Patullo, stuff like that. Check on your Philly friends. We're not well right now. Okay, let us get into the intraday tape. You should be seeing my dashboard panel. Let's get into it. Boopity bop. Let's go into it really fast. So this is, we'll get to the intraday at the end, but very nice climb here in SPY. We are truly just 30 cents away from new all-time highs. When the market has bad news, it loves to go against the grain and make basically the smartest people look dumb, basically. So we are up higher here. Tesla up 1.5%, a monster move for that. Gold up 2%. Silver, that is not a typo, up 7%. BABA, aforementioned, up 10%. AMD up 3%, Broadcom up 2%, and Walmart up 3.5% on being included in the NASDAQ. So Walmart truly successfully transitioning to being a tech company, essentially now being in the NASDAQ and closing in on $120 almost a share. As we go into the intraday tape here, so again, the markets last night, I know I was seeing while the Eagles were going into a disastrous second half, I saw, all the Powell things happening and the markets opened lower this morning. We went from essentially 694 in SPY on the cusp of new all-time highs to about 689. And look at this, the bell opens and they said, let me buy them. Did the banks and the dealers. They went from 691 to 694 and no looking back. It was a small consolidation at 10 a.m., another small one at noon. I'm talking basically digestion of those gains. VWAP continuing up and to the right. And as I said, we are 30 cents away from new all-time highs, even given this, the background that is occurring. It is not a good one in terms of the Fed coming under fire. You don't really want to see that happening. It's not supposed to be happening in America. It's a little bit concerning. Okay, so that is SPY. Yeah, it looks good to the right. We could basically go with gusto here into new all-time highs at the close in a perverse manner. And folks would say, "What really? We're supposed to sell the market when you saw that Powell video?" And the market will always trump your thoughts. Okay, so here as I zoom out, all-time highs here. As I said, this was done on Friday at 695.31. We are on the doorstep here. I think we're getting very close, as I said, to the end of this run. I had my day on or around Jan 8th-ish, and we were going to close right around that 699 level. We could possibly see a little bit of movement, but I'm not seeing a breakaway thrust or anything like that. I have maybe $5 of upside, absolute tops, and we are going to most likely, I think, probably pretty much coast into earnings as JP Morgan reports. I believe they're either tomorrow or Wednesday, and I am seeing a bit of a pullback going down to about somewhere, to be frank, around, let me put my cursor here, right around the 678 level. I think it's absolutely normal and I think almost healthy for us to go down to about the 50-day moving average. It may seem like it hurts and it's bloody. That is a 14-point reduction, or about a little bit more than 2%. It should probably drop it to right around the 50 RSI. Folks will doubt the bull market. They'll say, wait, it's XLI, it's RSP, but it's not the Qs. The digital alpha peak in Q4 2025. Yeah, very likely for now, but I'm not going to short that complex as Google became a $4 trillion company this morning. And you still can't ignore the AI tailwinds and the productivity that it's going to give. You can see the Atlanta GDP numbers. It looks ridiculous, plus 5% year over year. We are becoming more productive, but at what cost, as that barbell approach happens with the unemployment rate, and then you see Powell, with the dual mandate of what they're trying to do. But still, things look decent here. I would have a little bit of a balanced approach here. I've been talking about small caps. The name of this video is I'm going into metals today. I have open orders for after this. Yes, silver and gold are quite high, but they do belong in your portfolio 2026 and going forward. So last thing here, as I said, a little bit higher potentially, but the ceiling is right around 699, 700 for this. And then, as I said, a bit of a drop for the next 2 to 3 weeks. This will have a bit of put a lid on the market. This Powell news. This doesn't really put warm fuzzies into the market. VXX, the volatility is not jumping on this. We will get into the themes today that is running off of it, but I don't think it's great for the market long term. And again, this run, because I'm a big cycles person, this run began on for SPY. I have it right around December. So this ugly candle was on December 17th. We were down 1% that day. I have this this move happening after that, right here, after we cleared that on December 19th is when this rally began. VWAP that day was 679, a beautiful run all the way up to about your objective target of right around 699. We're coming on the door of that or close to it, within 1%, less than that actually. And that will complete, in my opinion, this part of the run. Okay, let us get into the themes of the day. There are some massive movers. So again, let's take a look at this. Chinese internet, the theme of the day. Baba had an amazing day. And this is a big, big thrust here. This group has been in somewhat of a purgatory since the week before Thanksgiving here on November 20th with that down 3% day. That old support of $36 became, starting right here on December 22nd, that became, instead of the floor, that became the ceiling. And you see it here. It tried on January 6th, just last week. And now finally, with this huge up 4.5% day, we are getting now back to those mid-November highs. And now you can see here, we're finally just crossing back, almost getting to 60 RSI. But this has had some really hard days here. Like as I said, when it touched the 200-day moving average, it got oversold. And again here, oversold twice. But here it is looking like it's improving with a strong day today. Is there more meat on the bone? Any derivatives trades that pop out? Anything like that? I don't. For me, fully targeted here was right around 37 to 37.5. It is truly at 37.5 as we speak. Great looking candle, though. It is at the high of day right now. So they are, obviously, I'm going to see how this one trades for the next 2.5 hours going into the close here. But potentially it goes as high as 38. Let me put my cursor here. Right around 38.5, 38.75. That's my top here. I don't think this new wall gets taken out. So again, this peaked October 2nd at 43.35. I think your new resistance here is going to be just a touch under $39. So I do believe in the emerging markets trade and spreading your book across the globe. You should not be just United States anymore. I remember writing, I think it was a year ago or maybe a year and a half ago now, about FXI being uninvestable almost through all their lies and, shifty accounting practices and everything else. But you do have to diversify. There's Africa, there's all parts of Europe that are crushing it. But KWEB, a very important move here, trying to hold with gusto here above the 200 moving average, which, by the way, is just going up by about a penny a day here at 36.38. That is your, hopefully, and I believe your new support. As I said, this may go as high as tops $39. I wouldn't want to sell those calls. Potentially, you could probably, maybe, I don't think you're going to get paid much, but if you could pay, sell the 35 half or even the 30. Yeah, kind of like selling that 35 half plus. I don't think you're going to get paid a ton, but you probably go out maybe 3 weeks. Might get a little bit close, or you could do a bull put spread where you would buy, you would sell the 35 half and maybe buy like the 34 half. But I would have to look closer at the option chain to see if there's actual meat on that bone for that trade. But why are we talking about this today? KWEB, one of the biggest winners of all today within a non-metal complex. Speaking of the metal complex, GDX, new all-time highs today, up the same absolute amount as KWEB, up 4%, off just a touch from the high of days here. As you can see that carrot there, the green here. I want to say go birds. Hurts. It hurts. Again, Jalen hurts. Damn it. The high, all-time high here is basically $97. They shot up there to that candle and then off basically about 50 cents. You see a convergence of moving averages here at about 88 half to $89. You got to allocate to this. Gold miners, doesn't give me warm fuzzies when you look at the past year, and I'll be talking about this a ton in my presentation. It's not a lot of heavy S&P names here. The themes of the past year were metals, anything that you drop on your toe, you want to be long. Palladium, copper, gold, silver, anything that hurts, you want to be long here. It's not, the AI trade is not leading it anymore. It's not Solana. It's not Bitcoin. We'll take a look at those. Too software correlated to have any strength. GDX here, for me, fully targeted about $96. So again, I don't personally want to chase it here. I'm looking at the specific gold miners. I am going to put some metals trades on today, position size it accordingly. I think this probably has this week to go for further bullishness, possibly. Again, this is upper Bollinger Band closes here. They typically don't give you more than 2 in a row. So this could come, I don't want to say crashing, but this could come down to like $89, $90 at some point later this week. And then that would be your entry. But look at this chart. Not one touch of the 200-day moving average since last January. That's just an undefeated, just amazing run for the gold miners. Something tells me it does get to about $89 in the next 1 to 2 weeks, and then you should, I don't know about load the boat, but you should allocate if you don't have any, because this theme is not going away. Speaking of another theme that's not going away, something else that hurts, I can't say that word anymore, hurts. When you drop it on your foot, silver up 7% now. It was up higher by a touch here to 78.17. That is a new all-time high for silver. You have a bearish divergence, although it's not gross. You are still over 70 RSI. However, I want to see something like that kind of euphoria, animal spirits get to 80, 85 to really let me believe that this could go even higher. But again, silver has been on an amazing run, obviously. It really came into its own here once it started getting above the 200 moving average. Again, we were talking about the miners, a perfect chart since January. This had actually a tough Q1, just kind of going sideways, but constructive advances. But really, once mid-April happened, right around that Easter timeframe, boom, this really is one of the absolute best charts in the market. New all-time highs today. My full target, though, is $73. So for me, in terms of the cycles, this has another about a week to 2 weeks of bullishness, which is insane to think about. So buy this on pullbacks because they will. I don't think you're going to get an entry to $66. That is $11 away. And if they take their foot off the gas in S&P, as I'm expecting over the next 2 weeks, they're only going to bid this up, I believe. I don't think correlations turn to 1 on this entirely. So we'll see. As I said, the high today is 78.17. They did sell it lower by about 1% here. So we'll see how it closes. Something tells me possibly, though, now I have to use the patterns with, the tops and bottoms here. I think it's very possible you get to about $67 or $10 off be careful. I'm not sure the catalyst that will send it there over the next 2-ish weeks. But if it gets there, you should pounce on it. This is one of the absolute on fire themes of the year. Okay, let's look at the losers. So what are some of the victims, collateral damage of the comments over the weekend, everything that's been going on? Regional banks. We've been talking about the regional banks, very important group. If things are looking great here, how bad can the market be? But regional banks here, again, a lot going off of what the comments were from the president and Powell, and if the Fed independence is at jeopardy. But this group just put in highs on Friday. Okay, so one day does not a trend make. Yes, it is down to 1.5%. This is coming off of 52-week highs right here. Okay, again, don't forget, regional banks all-time highs was right after the COVID days of nearly $79. I'm not going to ignore this trade. People love the catch-up trades. Regional banks, just like we talked about GDX from 6 months ago, we said it was going to get up there, and it did. Same thing, I believe, with regional banks over time. I love the chart; it looks phenomenal, and it's with the small cap trade, and it's not super correlated, obviously, with tech. So KRE is going to be a place, I believe, this year to buy on pullbacks. Also above a 46 RSI since the week before Thanksgiving, with a inclined 200-day moving average. So things look good. An ugly move today, obviously, to the 21-day EMA or exponential moving average. I think it has a bullish week, though, and I think this actually gets close to $69 to $70. I know it sounds insane. I'm just looking at the charts here, and I like what's happening. And again, the market likes to make fools of us all. I think this has a decent week, believe it or not. Maybe it takes a little bit longer, 10-ish days or so. I'm kind of seeing new all-time or new 52-week highs for the regional banks, just looking at the charts, and that's usually what leads me down the right path instead of sticking some insane narrative as some folks do. So this looks like, to me, this will have a lift to about $3-ish maybe in the next week or so, the regional bank. So I'll be taking a look at this closely. I kind of like buying, say, you can buy yourself time, maybe do the April 66 calls. If that is listed specifically, I'd have to look at the chain. But yeah, that's an at the money. You can also, I like that trade for now. You can probably do an April, maybe a vertical, and sell the January, 67 or 68, probably 68 calls. So play with kind of a call spread like that. You can also sell those 61 or even 64 puts, rather, depending on your duration, what you want to be exposed to. But I think KRE is in a decent place. I'm looking for a peak on it in the following week, and then likely a pullback to no lower than 64. Hence my thought process behind selling those 64 or 65 puts. On a broader view, the financials are down because of a lot of those credit cards are in there in that constituency of XLF, the Visas, the MasterCards, Capital One's getting hammered today on capping interest rates at 10%, and now that crazy 25-30% APR stuff. The XLF chart looks wonderful as well. This has had new highs on January the 6th. Again, these are all-time highs. The Jan 2022 for XLF, just so you see on the chart, because that's where KRE peaked, was right here. So the going got good right here for regional banks, and then they stopped. XLF said, no thanks, I'll see it, and they passed by it with momentum basis in March of 2024, and now new all-time highs for financial. And we're going into the JP Morgan print this week, and I'm sure their FIC and equities business are absolutely crushed and dominated, but we'll see what they have to say about the consumer. Everyone, of course, listens to Jamie Dimon's comments and what they're going to have to say about their individual business lines and their usage of AI and what they're going to do with their massive, almost bloated workforce. So we'll see. XLF, I like the setup here. What I said for regionals, of course, has to go for a correlated asset like financials. They're different in terms of your risk and how far you go out on the curve. I like the chart. I think the banks will do well. This looks like it's going to have about a bullish week and a half to about $57. That would be new all-time highs. And then you'll kind of forget about everything that's going on in the background of this, the Powell Trump nonsense. But XLF, a great looking chart. Had a tough time here Thanksgiving week. And before that, of course, when SPY had its 52-week lows back in the spring in April. But still, a rising 200-day moving average, a nice hold of support at $51, and a 200-day moving average rising up here at 52 and above 50 RSI going back, as I said, that Thanksgiving week. I think the financials are in a decent place, and I don't think that credit card cap will happen, and we'll see what happens. But that's my thought here. This looks like it's going higher to $56.5 to $57, and that would be new all-time highs for the financials. I see it happening in the next week. Again, notice we're not talking about tech and buying NVIDIA and breakouts in Palantir and Micron type stuff. That's not the market that we're in right now, and you got to trade the market in front of you. Okay, number 3, XBI. They are not buying this one today. Last I checked, this was down 2%. They, accumulated a little bit. Now it's down 1.6. Look at this rejection here on January 7th. They sent it to 129 and then got dikembe'd to a low of 123 that day. And that's basically where we are today at 122. A very, very attractive hot group, though, above 45 RSI since May. That is outstanding. And then things really came into their own in different phases. Mid-August, once you got above a 200 moving average, and then the slope here at the end of September, once you got a breakout above $98, as well as the same time it happened, overbought registration and a curling up of the 200 moving average. That was an easy signal. You like to have those different statistics pile on at the same time, and there you go. It's truly up and to the right, off to the races, 100 to 129. Now what do we do with XBI, given everything that's going on in the markets? I like it here. To be frank, I love entries from a risk reward basis under 123. And last I checked, 122.40 is under 123. This looks like it's headed to 129. It's not going to be in a straight line, but this looks like it's headed to 129 over the next 2-ish weeks. It's going to make you lose some hair through volatility and whatnot. But I do think it'll get back to that rejection level. The chart looks absolutely great. It's volatile. Popping out in my mind are buying those April 125 calls. This is not the straight, buy calls environment. I almost buy the 125s and then sell this January 125s and see what you can do. Maybe do a 1x2 to help subsidize and get yourself a bigger credit. But this is absolutely a great place to be in. And this is more of a second half story. We were talking about the gold miners and silver, impeccable charts, very compelling. Regional banks, untouchable. And then you look at this. And this has really been a second half story, as I said, specifically from August, so on. Group looks absolutely phenomenal. And that's biotech down 1.5% on the day. All right, if you have a ticker or something, put it in there. We'll take a look. There are quite some shifts happening in the markets. Let us go to the top 3 gainers of the past 5 days. I really want to get as uncorrelated as possible, but a winner is a winner is a winner. And the number 1 ETF over the past 5 days, up 13%. Half of that is today, is silver. Okay, SLV. I already said what to do or what I think with it here. It's, to me, $73, $74 is fully targeted. I don't want to chase it. This is a hot group, though, so they buy first and then ask questions way later. I am looking at that level here, right here, about 67.5 for a pullback if you're able to get it. I know it sounds crazy. Silver moves very volatile, though. You got to wait for these candles to get smaller. Right now, the exuberance is way too hot. So you can play this one over and over. But silver, very hot right now, the best ETF of the week, and that's why it is as extended as it is. Number 2, though, this is interesting. The home construction space, after all the talks last week, Trump about Blackstone, BlackRock, et cetera, about, institutions buying up single family homes really, jolted this market. And we were not quite sure about how high it was going to go. Here we're up another 1.3%. Look at these candles. Absolutely remarkable, coming off of $96. And now it's interesting. We have, let me just pull this up on a different time frame here on a different screen for the chart. So this is home construction. I was not so sure. I thought this had a very hard wall here at basically 106. Okay, I did not think, I think best case scenario, I thought we were going to fill that gap from October the 6th and then live here. This is a very interesting move, what's happening today, because now we are going further in here. So now next level, just looking through technicals, is 110. I'm not so sure. I want to see if this get overbought. It is 69.5 registration right here. The last time I was higher from that was the 52-week high that came Labor Day week at 118. So a very important point right here. The 200 moving average is going up. There are worse places to be than home construction, but it's getting a little bit heavy here. I don't like chasing this one where it is here. You do have some resistance at 110. So you're getting very, very close, $2 away here. I think this one will mean revert to about $100, a $101, and that'll feel like pain when it happens over the next 2 weeks. But they've had a monster rotation into this. Again, hard assets over digital has been the theme for the past 3-4 months. And this one looking like it's getting its legs underneath it. Home construction, the second best ETF, up 10% or an average of 2% a day over the past 5 days. And then number 3, SHLD, defense tech. You don't just invest in tech, a little bit scary. You invest in the future. The future is typically technology, and that's why the Qs is the GOAT. But SHLD, look at this. You invest because you have to invest in defending yourself. And that is what's happening here with defense technology. This is not straight AI. This is Raytheon, Lockheed Martin, stuff that blows you-know-what up. So this is an impeccable chart. This is like silver. So a lot of fear trades here. You can call them catch-ups, with the U.S. having the home of the most multi-trillion-dollar companies, and perhaps now the pie gets a little bit bigger for the rest of the globe. But here, when you see defense tech ripping like this, I understand what happened in Venezuela last week, obviously helped propel this. But this is a new all-time high again today, up 9% over the past 5 days is SHLD. A great looking ETF. I don't want to chase this here. This looks like a better entry is $70. And that seems crazy. This does not move like silver in terms of volatile to the downside. This is an 81.5 RSI, as high as it's been all year. We weren't talking about Venezuela in February of last year. Yeah, they got overbought to the upside. Same thing in March, overbought. May for longer. Massive volume in September, more overbought. So this thing has, this is like Taylor Swift at the top of the charts every month, it seems. Just basically undefeated is SHLD. This month, no different. It basically does almost every other month. Folks get almost like a silver-like frenzy into this. So I would sit this one out for about 2-ish weeks, and I'd much rather have an entry around $69, $70 or so is SHLD. SHLD, one of the leaders of the entire year, of course. Look at that chart. And this week, the third leader gets your runner-up there after silver, home construction, and SHLD. Okay, let's see the losers here. What did they slam over the past week? Natural gas. Yikes. Down 5% is natural gas, but today up 8%. So, again, this had the all-time low, UNG, that $10.38 on Friday afternoon, and now we have a decent rally, up 8% is natural gas. It is absolutely freezing today, and it is supposed to be on the East Coast for basically a couple weeks, essentially. The low here, I think this may have to flush out another low, maybe getting to a 10 handle. I'm not so sure if I buy this today, but if and when it is, going to be heading north, upside, I do think this has a dead cat bounce up to about right around 12 quarters. So that would be $1.05 from here. Pretty decent looking move. Be careful with the options. They're very cheap. You could also buy the straight ETF as it's a $11 name. You could buy those 12 calls, but I don't think they're going to be worth a ton if the target, like I said, is 12.30 and intrinsic 30 cents. I don't think it's going to be super worth it. So, but I do think this is potentially bottom. That's an ugly looking chart. Never oversold. Massive volume there. Looks like anyone who wanted to get out of nat gas on Friday looks like they did. Massive volume, over 40 million shares, above average. This looks like it will get to about 12 to 12 quarter over the next 2 weeks. All right. Now let's look at the next two are crypto related. Crypto continuously looking weak. Too much software correlation. They're bidding up gold. They're bidding up silver. They used to call Bitcoin digital gold. I don't hear that too much anymore because they are really buying that other stuff for fear. No one's just absolutely putting all their capital, it seems, anymore into crypto. Let's take a look at the second worst ETF of the past week. I haven't looked at this in a while. Ethereum down 4%, so just a touch behind nat gas. Today it's up 1%. It is tussling here with its 200 moving average. Ethereum peaked back in late August at $37 nearly, and now boom, it's really fell on hard times. November 17th, and still till today, it had an amazing volatile rise to the to highs here, as I said, in August, and now we have a 200 moving average that's still continuing to rally, advancing, going higher, but we are underneath it as of today. Or we've been, basically a little bit above, a little bit below since mid-November. Ethereum down 4%. with a little short-term top here on January 6th. Now what going forward? And if any trades come to mind, I don't like this chart. This does not look sensational at all to me. This looks like it has 2 weeks going south to about, I'm looking right around this 2060 level. Okay, so basically getting very close to where we were that Thanksgiving week. Okay, and then after that, rallies probably get you to 23. So it is not the time for software. It is not the time for crypto at this time. I'm not saying it's over or anything like that, but I don't like to see these little just jerks for 2 days above a 50 RSI. The sellers are in control of cryptocurrencies right now. It's just as simple as that. Ethereum does not look good for the next 2 weeks. I'm looking at a move lower to about, as I said, 20, right around 20 half level. That's ugly considering we're at $23. So potentially a $3 wipeout or more than 10% from Ethereum over the next 2 weeks. Not so good. And then the third worst ETF of the past 5 days is, unfortunately, Bitcoin. Whoops, wrong selection. There we go. So IBIT, going a 1 year chart. Ugly, 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 ugly. So if Ethereum peaked in August, Bitcoin peaked in October here at nearly $72 a share, and then fell on hard times on election day, and just absolute rug pull, just nothing doing yet. I like the higher lows here that have happened, but not even coming close to the 200 moving average. This equivalent, by the way, is 104K in Bitcoin. If you want to be a lazy trader, you could set an alert. Once I was talking about with the trader this weekend, once it gets to 104K, new all-time highs would be imminent after that. A lot of things would be working right for cryptos, but right now is not that time. Okay, so and again, that level for IBIT is $59. We're at 52. What I'm saying here for crypto, or specifically for the IBIT ETF, goes for Ethereum, goes for Bitcoin. This looks like it's headed to $47 over the next 2 weeks. This does not look so good. $47 is right here. That's going to be just a rock's throw away inside of that Thanksgiving week lows here when we touched near that $47 basically. And we were oversold the only point in the year. So the buyers are not in control of crypto. This is not good. That the best rally it could get was $54, almost reminiscent and corresponding with the Qs not getting close to their highs, as I said, from Q4. So this is just not the state to be in here. While the Ethereum moving average 200-day is going higher, this is going higher by about 2 cents a day. I'll call it flat line at 59. There's ultimately your resistance, again, corresponding with 104K in Bitcoin. But this looks ugly. Over the next 2 weeks, this looks like it's headed to $47 or about a little bit more than 10%. And Bitcoin is about 90K right now. So yeah, about 80, low 80s, about 81K or so for 2 weeks, and just more frustration for you crypto holders. I'm one of them. So not so great. I do like, last thing on this, I like that's holding 52 RSI. But again, I don't like these little jerks for 2 days above 50 RSI, and then it goes south. This has not, again, IBIT has not been above 60 RSI since the week of the all-time highs, and I think that's what all you need to know. They've just rotated out of it for right now, and that's really it in terms of trade. And again, this isn't strengthening. Some folks are saying this should have had a God candle today, with the whole Powell thing and just flooding into assets, etc. But this is up 1.5%, and it's gotten, I don't want to say shellacked over the past 5 days, but it is down 3% over the past 5 days. The third worst ETF after nat gas, crapola, and Ethereum. Not trading too well either. So this looks like, as I said, headed to $47. I would almost sell the 53 calls. You probably actually could get paid in that. That might not be such a horrible trade. I don't think it's unwise to sell the upside in crypto right now. It's not a bad idea. I'll look at that if that fits, but I'm focusing on metals this afternoon, getting along that. But this looks decent on selling upside calls on this. You could also buy the 50 puts, just right size it accordingly. I'm not sure if the absolute bottom falls out, but I do think buying puts in crypto will reward you short term in the next 2 weeks. All right, top 3 trades of the past 5 days. This session, including the previous 4 + 1 = 5. Long silver, long home construction, long shield. If you're continuing those themes, they've dominated 2026. It's 2 weeks in, and it looks like they will continue. Tune in tomorrow to the morning show with JC and Straza. I will have this, a lot of charts, some that we already talked about. We'll see how the close goes. And then boopity, 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 bop. Thursday night, come out to Fidelity in New York City. I will see you there for more charts and cocktails. Peace.